All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Great to see you this morning. Thank you very much for tuning in. If that's what you're doing, and if you've been with us all day, that's a good thing too, because it's my job to make you stay. Let's see if we can continue with that by taking a look at some of these prices. How about corn? Let's bring up that corn board and get started. September's up 1.25 cents to 6.12 1/4, and December lagging. That's off a quarter cent here to 6.10. We have been a little bit lower, but what I'm noticing here is SEP overtaking Dees by 2.25 cents. That SEP-D spread moving out with September the leader by about 2.25 cents. Something to keep an eye on there. That's interesting. All right, let's take a little bit of a peek here at soybeans. What's happening with that bean market? Well, SEP also doing well in that market. It's up 12 cents, 14.66 1/4. That's about 11 cents off the highs, but we do have Novi beans up 4 cents to 13.85 even. 6 cents off the lows. We have been up to that 14 level, just kissed it, came back down here. So again, up 4 cents, but about 15 cents from the $4 level. Let's take a look at Chicago wheat, the wheat in Chicago. What's happening there? Not anything decent, nothing really good. September's off 19.5 cents to 766.5. And that is about 7 cents off the lows. We've got March, middle of the curve, 19.25 cents lower to 797.5. Let's take a quick peek at what's going on in Kansas City, where much the same is happening. We've got September up there, 20.75 cents to 8.51, 10 cents off the lows. We've got March, 21.25 cents lower to 8.53 1/4. All right, let's see what spring wheat's got for us in Minneapolis. Much the same, pretty much. There you go. 15.75 cents lower to 8.87, and that's the SEP contract. Dees is at 8.97, about 10 cents higher, but still 15.25 cents lower. Finally, let's take a quick gander at what's been going on in that cotton market. Backing off here significantly, 463 points lower after 2 days of sharp rallies. 112.22 is last. Again, that's 463 points lower. Let's bring in Tony Headrick from CHS. Tony is an energy guy. Thanks for joining the show here this morning. Tony, what do you got for us? What are your thoughts?
Well, thanks for having me, Scott. Well, as always, on Wednesdays, we see the EIA release their statistics on U.S. energy demand and supplies, and we saw some really interesting numbers today. The one that sort of rises to the top in interest level, to me at least, is crude oil exports rose to 5 million barrels per day. Now, that is a sharp move higher week on week and a record there at 5 million barrels per day. And so I think in sort of over the course of the last several months, as SPR barrels have been released, the WTI, or the U.S. crude barrel, has been priced really lower compared to international prices, and so we've seen that really encourages exports and really evident here last week. And then meanwhile, we've got the AAA reporting U.S. average national gasoline prices at the pump, $3.90, $4.30, and that seems to have translated into a bit of an increase in demand as prices have come off here. So they showed a fairly decent uptick in gasoline demand last week. So much of the concern from June and July in gasoline demand seems to have dissipated. We were up about 2.5% last week on U.S. gasoline supplied, which is their proxy for demand, to about 9.348 million barrels per day. The market today is pretty choppy in reaction, however. I think we're looking at some outside factors to a degree as well, with crude down 30 cents right now, pretty volatile session. Equities are off quite a bit from their high, and the dollar is a bit stronger. So those two components act, I think, today to put a little bit of pressure on the market. But we've got FOMC meeting minutes here due in a couple hours, and so we'll see if that can shake things up here to the balance of the day.
Do you have any? Well, you have about 20 seconds, but do you have any concerns that you could see a price spike here in the short term? Because that's really why we had CPI come off late last week, and it was interesting to see what that did to inflation.
Yeah, energy, reduced energy prices certainly were a big factor in that CPI number coming off a little bit here. But yeah, I mean, looking at the fundamentals of the market, it's really still a very tight marketplace out there across energy. Whether that's natural gas globally or crude oil or refined products here. In fact, one thing that I do note pretty closely week on week is really the overall petroleum inventory slate fell really sharply last week.
All right. We'll Keep that in mind. Thank you very much. Tony Headrick, CHS. We're going to go away. We're going to pay some bills. We're going to come back and talk livestock with me after these messages.